Hello to all the CA final students as well as everyone preparing for their interviews. Now, yesterday's surprise rate cut by the RBI of around 50 basis points serves as a classic case study for your academic concepts and their impact on the practical world. So, we'll quickly review the impact on three important financial markets. First, the equity market. As expected, if the interest rates reduce, the equity market should go up because the cost of borrowing in general reduces. At the same time, the high beta stocks go up significantly more. So if you see, yesterday the equity market went up by around 1% and the high beta stocks, that is automobiles, financials as well as reality, surged significantly high, where reality index went up all the way up to 5%. So that is a classic impact of a particular macro event. Second, when you study currencies, you have been taught that in general, if you have a currency where interest rates are reducing, the currency should ideally strengthen, and hence the currency, which I think was around 85.7, went down to around 85.6 or something, and that was a slight strengthening on the foreign exchange market. And third, which was a very interesting change in the fixed income market. Now in the fixed income market, usually if the market interest rate falls, then the bond yields will also fall. Now, in general, for the short term and the medium term maturities, anywhere for around 2 to up to 5 years, that was seen where as the RBI reduced the interest rates, the short term to medium term interest rates actually fell and thereby bond prices went up. However, the RBI also changed its policy stance from accommodating to neutral, which indicates that in the long run, you don't see any further rate cuts. And hence, surprisingly, the long run bond, which is the 10-year Government of India bond, actually went up. So there was a fall in interest rates from around 6% to around 5.5% of the policy rate. And in response to that, the short-term and medium-term rates also fell down. However, the long-term rates actually went up because now in the long-term market, people are not expecting a further fall in the interest rates. So these are three important things that you should know on the equity, currency, as well as a bond market. If you like such content, please do comment and subscribe so that we kind of give you more such updates. Bye-bye and take care.